Yo. Eee- Yo. Interesting. Interesting chat in here. 99.99% pure. Makes me think you guys do something else that isn't trading. Going on here. Ugh. I don't know, man. Maybe jobs? Ew. Day job. It's alright. More answers for you guys, right? Hold up. I'm gonna fix this. Uh, I'm gonna wait for more people to join, but there's a couple things I wanted to talk about, guys, because I low-key think it would help your guys' trading. Uh, Poop Shiesty is back? What the? Mm. Dude, you wanna get some food today? Question mark. Um, I'm fairly new to trading and new to TL. Any advice? Yes, I'd recommend watching all of our videos. Um, these next 2 weeks also, we're having our admins host a class twice a week. Yesterday was the first one. I think no, 2 days ago was the first one. I think today is the next class, and then there's gonna be two next week. I would recommend tuning into those. They're gonna go into the more complicated stuff like the options exposure. So I'm leaving most of the third derivatives to them because I'm pretty sure they'll do a good job covering it. Other than that, I say ask a lot of questions, being curious. Um, Obsessively curious about this stuff will make you a better trader overall. So, don't be afraid to ask questions on what things mean, especially if you're new. No dumb questions, unless you're Sheen Trades. I'm just kidding. Are you all the way? Yeah, but you want to go get food, bro? Yes, you. and get food after this. Mm. Mm. Ooh, thank you. Hold up, someone added me on Twitter. Bro. Um, when looking at Gex raw and Gex delta adjusted and Gex flip points differ, which one is more accurate? One to use for SNR. Okay, so here's the thing about that. Um, I think they're both accurate to use, but I would mainly use delta adjusted if I weren't new to looking at all this shit. Delta adjusted is gonna give you more line in the sand type of thing. The 0 point won't change as much, so it's a little bit easier to actually read. The thing with the raw exposure is it's a naive calculation, so it's gonna fluctuate a lot as we move in price all the way down to the 0 point or from the 0 point. Um, the delta adjusted version is not really a naive calculation where it's a little bit more solidified with changes in delta. So the like high exposure strikes are going to stay longer. They're not going to move as much because that's just delta is like the way it's calculated. I'm not really going to go into how it's calculated because it's kind of proprietary in that sense, but um yes, I would move to delta adjusted if you're using raw gamma exposure. I'm thinking about taking off raw exposure because honestly, it seems to be confusing a lot of people. I only really have it there because I use it. And I don't really use it to make a trade. I use it to spot the differences between both types of exposure because I don't know. I just like to. Um, Sometimes it helps me. Sometimes I ignore it. So my suggestion, stick to delta adjusted. Yeah, no problem. Uh, is it time to do some shopping? I'm down. Loki, I'm trying to get some jewelry. It's just all the stores don't really have shit that I like, I guess. I need new earrings though. Um, is there a way to tell? All right, is there a way to tell if price will get to 5100 or reject 5090? Um, yes. So if we get to 5100, I would okay. So how I would play this, right? And this is just advice. You don't have to take it. Um, if we move to 5100, that's the move that you should be playing, right? You should not so much play the move to 5100, but the move from 5100. And I think that's a short area. If we get to 5100 or 5090-ish area, you can start getting into short positions. Um, but the reason why I don't like to play the move there is because sometimes it never hits. Market's gonna drift wherever it drifts to, but your job is to react to price and uh think of gamma exposure as like a map as to how to react once the price gets to a certain point. So if price um you know stretches past a certain point, like to the 5090 area, that's where I would get into short and I would play it all the way back down to the mean area of the distribution. And if you're confused on what that is, we have videos on it on our YouTube or on our last live my first live stream I would watch that one, which was like 2 videos ago. Um, If you take off Raw, I'm gonna punt kink you. Okay, so that's another reason why I won't take off Raw, because fucking Sheen uses it. 31% chance. Uh, I want them Travis Scotts. Get them Travis Scotts, bro. Get the off-white, forget what they're called that you want, but you can go get those. Um, the difference between, or you could buy a house, bro. Like, um, the difference between Delta and Raw. Let's just say there's big gamma at Raw, not on Delta. Does that mean market makers already hedged? So no. Well, okay. You can go under the assumption that everything is hedged. Everything is already hedged. As soon as the order's placed, everything is hedged all the time. What you're trying to do is you're trying to exploit the risk factor on those hedges, right? If we move too far up, if we move too far down, it in a certain gamma exposure environments, a lot of positions are open to that Vana exposure aspect. So because IV gets too high on those positions, they have to either sell off Delta or buy back Delta based on being overly exposed to the market. So um, it's not a matter of uh, trying to time or trying to like see how they're hedged or what they're hedged. They're always hedged. As soon as the order's fucking placed, they're hedged. You're just trying to exploit the risk factor because all hedge funds are built on risk management, right? So they're going to have to systematically re-hedge their positions if they're overly exposed. And that's what you're trying to catch, right? So if they sell off a bunch of shares, right, because the options impact is so high, you're trying to catch the move that gets created by selling off, thousands of shares of stock because they have too much delta, risk, too much delta exposure on their position, and that's what you're trying to do. So, um, yes. I don't know if I answered that question properly. I just kind of ranted. I'm not gonna lie. That's how I think. The difference between delta and raw. Let's just say there's a big gamma. Okay, so I guess I kind of answered that. Everything's hedged. Um, you can't really like see what's hedged through gamma exposure. You just assume that it's all hedged. Yeah. Because if you think of it, right, smart money they're not gonna put their any risk on their money at all ever. Um, they're once they place the position, it's because they have risk models in place, whether it's hedged through a different asset completely, right? Because they might buy options as the hedge, but their main position is fucking Goldman Sachs long ETF, which is literally only shares of SPY. How do you hedge that? You hedge it with puts on SPX for options. What's that ETF called? I think it's called JHEX or something. JHEX? Fuck. I got a JHEX. Yeah. Okay. So this is it's JHEQX. JP Morgan Hedged Equity Fund Class 1. A lot of times that equity class or that ETF is hedged with options. Um, the big JPM caller, for example. Hope that answered some questions. Mm-mm-mm-mm. What's the amount of negative lambda exposure that you would make it bearish? Been increasing recently. Getting more negative. So when it comes to lambda exposure, the way it's calculated, I'm more looking individually into the strikes, as opposed to the overall amount. Um, but you could take, I guess, the overall negative amount as bearish, just kind of how like negative sign bearish without the negative sign positive, bullish, because ideally what it's trying to track is the chance to be the chance for options contracts to appreciate in value. So If there's more negative lambda exposure, that means downside has a higher chance of appreciating in value. What happens when contracts appreciate in value? The stock goes in their direction. That's just kind of basics about it. And that's how I really use it. So I'm using it to gauge what the market's thinking, kind of ish. Um, but that's not to say that like lambda exposure is telling you what's going to appreciate in value. Again, just a chance of what's going or what's more likely to appreciate in value. Um, I know Fatty in our chat, I think he utilizes it as the more negative. He sees the exposure. He sees it as a more bullish I think term because if they're already appreciated in high or in high value, that makes it harder to purchase the contracts. Something I forget. I gotta talk to him more about what his ideals on it. Maybe you can explain it in chat if he's listening to the stream. Actually, no. I think he might have already explained it. If you type in Lambda in chat in the Discord chat, you'll probably find more stuff about it. Damn, the Vaughn exposure is exceedingly high today. Jesus. Yeah, probably was not the smartest move shorting on my end. What are exposure scenarios where you can see that a move EOD is going to happen? When I see an exceedingly amount of charm exposure, either negative or positive, depending on what type. So negative, an exceedingly amount of negative charm exposure would tell me at the end of the day there's probably going to be a large pump or vice versa, short if positive. Um, as well as if we're far enough away from a gamma exposure high sensitivity point, and there's not much time left in the day, uh, those are the types of factors I look for like a crazy 500, 700% return at the end of the day, last minute 0 DTE type of play. I don't condone taking SPX 0 DTE at the end of the day like that, but um, that's what I do look for if I'm being 100% real. Just uh very far away from the nearest high sensitivity point, and then a large negative amount of charm exposure if I'm looking for a pump into close. Um, Vana has to be positive. Um, yeah, dude. So I reshorted earlier. It was green and then is very red now, but I'm gonna hold it. Um, I think a little freakiness might happen at the end of the day. Oh, and did you reshort it? Because we've been going down up until the point, up until the fucking bottom of the day, I guess. Did you short the bottom of the day? I think I shorted like at 9, 9:01 maybe. It was like in the middle of that little pump between 9 and 9:02. Then we went back down. I was green, and then I wasn't. Oh, wait, so that's the same time as me. What the hell? Or around the same time. I know why you were shorting. I sized up after thinking we would get more of a retrace down. Yeah, Sam. Ugh. What time is it gonna be done? You want to go to Belrose? Thoughts? Ranting is good. Your job is to, because this is happening, the mechanics. So we want to get that type of moves that blah, blah. These are the rants to provide. Yeah, I mean, I think there's a lot of value in the way I rant, honestly. But I rant so much so that it doesn't make sense a lot of the time because my thoughts are unorganized. That's why the squad made a job form for me to actually write down ideas because they're so unorganized that they need them in an organized fashion. Do you see Charm elevated today for a potential for a potential EOD play? Um, yes. Currently it's high, but all that it only matters if it's high into close. So if it changes between now and close, something to look out for. Very high right now though. I would say right now is like the perfect amount. Like if we were to close in the next 5 minutes right now, I would be playing long. This scenario, but 5 minutes left, I would be long. Do you see? Oh no, sorry, I answered that. Just keep throwing money at it till it does the thing. Nah, it's lucky one of my strategies. Throw money. It'll work. Y'all ever thought about doing a paid mentorship for 4 weeks, for example? I'd play a lot, pay a lot to learn from you. No, honestly. I think, to be honest, we wouldn't even be charging anything if, we didn't have to pay for stuff, right? Like, even with the platform, um, it was originally to just give to you guys. But this was before that data costs and stuff. So because data's so expensive, we're almost forced to have to charge for it. But other than that, like the education shit's free. You can just ask us questions. We're almost giving you guys a mentorship with fucking Fatty and Jay Crispy talking every twice a week. It's a really in-depth course on options exposure, but um no, I don't think I would ever charge for a mentorship. I think everyone should have the right to reasonably priced information. Yes, it is work on the person's part to give the free information, but like you guys can always ask me questions, subbed or non-subbed. Um, I don't really care. You could DM me. Um, but the another reason why is because honestly, I wouldn't be as active. Like I'm not as active generally because I this isn't like my full-time work, right? Like I do other stuff. So um I'm not gonna say I'm gonna be completely on top of it, but yes. Would you count would you count as large charm? Also, charm seems to change between 148 billion and 55. Yeah, it has been flip-flopping, but um, those are ODTE fluctuations as time passes on. So, really all that matters is what happens at the end of, or towards close. Free flow of thoughts is where gold can be found. Ranting need to be not need no need to be organized. That comes later when. Yeah, exactly. Hydrate, bro. Oh fuck, I got water on. Oh, I don't really got water on deck, but I got some water. We're striving. Ah, yeah. Uh, I'm locking in for this next Traderlink tool. I think we got some really nice shit. 'Cause we're kind of evolving as time goes on, right? Like originally we give you guys great data that um you can gauge market direction with. Now, next problem is a lot of people have trouble with the entries. You can still use the data for the entries, but it is a little bit more complicated. So, what we're working on now is something to give you guys a system for entries, really. Entries and exits. So, once that's made, I think the entries and exits part is going to be really easy for you guys. Um, Thank you, Fatty, for that one. He was cooking up on that. So, you guys already have mentoring with us. Data rocks. Thank you. Yeah, no problem, man. I'm starting to think it's all in our heads. I'm in your head. It is awesome. Damn, it sounds good. How long for that to happen? So our lead developer is out of the country right now, so he'll be back soon. But as soon as he's back, we're probably gonna get working on it. I already have all the math set up for it, thanks to Fatty. Um, we're just gonna work on visualization, make it look a little bit better. Um, Maybe add a legend to it. I don't know. Alerts to it, maybe. Um, So trying to do that. I think we're also trying to do like a hint bar for every module, like little you click a question mark at the like top right or something, like this cogwheel, and then it would bring up like information about how to use this exposure, what it is, basic definitions of it, for every single one. We'll take some time, even like shit like the footprint chart. So um, that's something that we're also trying to work on. And on top of all of that, we're also working on the algorithm. So, um, and we're also working on the machine learning portion of it as well. So there's a lot of things that we're doing in the back end. Awesome. Appreciate you guys want to share your knowledge. Yeah, no problem. New tools sound great actually. Maybe off topic from tools, but as far as education, a trade plan for growing a seed amount of money, compound it. Uh, yeah, I mean, okay, so with this new tool, you can essentially scalp. You can find an entry for a longer term play if you think direction is gonna go your way. It's really good, I think. Um, you enter if you're trying to make quick gains, right? You could use it for end of day. This is what I'm excited for, and I'm sure Fatty's using it in the same way right now. But you can go end of day SPX 0 DTE. You see an entry, you take that shit. It goes like 500% easy. So that's kind of what I'm excited about because I want to test that. Um, but yeah. So um, if you like it, post about it. Add us, at us on Twitter, add us on Instagram, add us on fucking. I don't even know if you can't do that on TikTok, but do your thing, man. Do your thing. Um, yeah. A lot of the times I really got made most of my money from ODTE, or a lot of it at least on my personal, not investors. Um, yeah, no problem, man. No problem. Appreciate that. You guys are the yes. Would you guys consider giving the exposures on an option of either vertical chart? Oh, dude, we were thinking about that actually. I don't know if we would do an option though. It would have to be either vertical or horizontal. We were thinking vertical. But then that would be hard to like look at the distributions if we end up going that route with the lines, because then the distributions would be, up and down. I mean, I guess not completely hard, right? All you have to do is fucking turn your head a little bit. You'll see it. But yeah, we were thinking about changing the charts to vertical and vertical, sorry. Thank you for all the knowledge. I'm excited already. I've been trying to get better at EOD SPX. Yeah, dude. It should cook up. It should cook up. I kind of want to test it before it gets out though first. So like with every tool, in order to make sure you guys are getting the best math out of it, the best everything we could do, the best of our ability, we like to test it beforehand, make sure it works properly. Um, if I don't make any money off of it, then I won't put it out there. If I do, then it's all you. It's all you guys. Um, I also want to start with every new tool introduction to have a video already, like with it. So like you guys, oh, new tool gets out, video comes out already explaining it, what it is, what it does, things like that. In your emails, in Discord, on the website. Can you share the beta link? No. Everything that we do is on our local anyway. So like there is no link to save it until it goes up to a dev page, which uh, no one has access to. I'll help test. Nah, 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 nah. Cause we can't give away the dev link, or else everyone has access to everything. Um, you said one of the mistakes people make is that they don't hold winners enough. How do you handle this? Um, so I gauge a direction for the day based on the exposures. Again, a lot of negative charm, a lot of positive Ana, lambda either negative or positive. All gives me direction towards where I think the market's gonna go. Skew in a certain direction. If they're all pointing towards up, I'm gonna be like, okay, there's a large direction towards the upside. Um, or large directional bias towards the downside based on those. Now, it's also important to put it into context with actual price action. If you're noticing that the low of the day was here or the high of the day was here, um, typically I stay wary if we're near high of day or end of day and I'm like going in the same direction. I don't like, I'm a reversal trader, right? So I don't like going the same direction as the market's already going. I think a lot of momentum traders get fucked on that end. So not my thing. I'm always looking for reversals instead. Um, Also too, the premium's cheaper on reversals. So if your market directionally biased towards the downside and you're trying to look for a call entry, the premium on those calls is going to be a lot cheaper than it is on those puts. Um, and you can capitalize on that. That's why I always like to try to find contracts that are like 150 or less. If I'm just going from the hip 0 DTE SPX type of stuff. Enter and watch the premium appreciate on a reversal. So that's kind of how I like to do it. Um, is there a class or video on IV skew? I've talked about it previously on the last two streams from yesterday and the day before that. So um, if you want more knowledge on that, I would go look at those two videos. It honestly skews a question I get a lot of. Um, I think I also have like a math class as one of the live streams from a little bit ago. So I think I might have in on it there. But skew is an idea, right? IV skew is a specific thing. But skew can be analyzed in the same sense for almost anything, right? If you're trying to get the skew of gamma exposure, you can get the skew of gamma exposure. It'll have different properties, right? Because gamma exposure is not the same as IV. So, it's mostly knowing uh, what those properties are of what you're trying to look at in the skew. So, um, but yeah, I've definitely talked about it in the past. People have asked. And I'm pretty sure Fatty and Jay Crispy will go over it. I guarantee you they will, cause I think I looked at the lesson plan a little bit ago. Pretty sure it's on there. So it'll be covered if it hasn't already for sure. You shared the math of skew in class. Yes. Yeah, no problem, man. No problem. Um, Thanks for the questions, honestly. I like having a fluid live stream. I appreciate you guys. 1.50 to 10 to 12. Yeah. So, I remember one time when we used to have signals in a Telegram, I had signaled a 1.50 premium, and I don't think at the time anyone was used to how I traded. A lot of my trades will go minus 90% before they go positive, and that's only because I early entry all the time. I early entry and then I average into it. But these contracts went to 0.11. They went to 11 cents, and at the end of the day, they closed like 13.0. Um, so um, that's why I always go with the intention to lose all of that position all the time. I don't think you should be in a position if you have like you shouldn't have stop losses in a position personally. Your stop losses should be the entire size of the position. So if you're only willing to lose $150, get one contract. If you're only willing to lose, $2,500, don't size in 10,000 and put a stop loss of 25%. Put like fucking only size 2,500 if that's the case. That's my methodology though. Um, Looking at delta adjusted gamma right now, it's huge at 5,100 but massively negative as well. Does that mean there are a lot of sellers waiting? Looking at delta adjusted gamma right now, it's huge at 5,100 but massively negative as well. Yes. Yes, to answer your question, KMA. I do believe that is a sell wall. Um, That's crazy. Minus 90% to a 10 bagger? Yes. Very crazy. So I like to think of assets as like as to why they were created, right? Options have way different properties than equities or other derivatives, right? I think options are built to make profit off of their implied volatility because implied volatility is specific to options. Now, implied volatility can lead to exacerbated moves. All right, so a minus 90% is an exacerbated move. I'm not going to sell out. And then especially if it goes back positive 20%, like why am I going to sell for 20% from holding for 90 minus 90%? Um, so that's why I size for zero on options. They're high leverage products and they profit off of implied volatility increasing. So, um, I think their highlight, right? I guess I would say is appreciating fast, being able to hold till zero because they're highly leveraged, so you can only lose what you put in, um, and you can make way more than what you put in. So, um, buy $2,500 in contracts and aim for zero. What the fuck? Are you all millionaires? Yes. Um, Geo, why is zero gamma level important from a dealer's perspective? Zero gamma level isn't important from a dealer's perspective. Well, okay, so it is and it isn't. I'm not saying that it isn't in the sense that nothing is going to happen from the dealer's perspective once we hit zero gamma, but it is important to take note that we're flipping from a positive to a negative environment because that changes the entire dynamic um, of where sells and buys are. So, if you're okay, hold up. Let me get a blank page going. Oh shit, what happened? I'm gonna give you the rundown real quick, all right? This is the rundown. I need drawings. Hold on. All right, you guys can see this, yes? Um, so hold on, I got fucking rock music blaring. Okay, in my zone, in my element right now. All right, so Positive. Fuck. Positive environment, right? So, let's say gamma exposure model looks like this. Okay? Imagine there's bars within this zone, right? There's bars in here. Uh, I'm using curves because I don't know, it's easier to draw. I'm not gonna draw 10 bars. Um, Positive, right? Bars inside. Dealers have their positions as buy stops or buy order blocks here, and sell here. I'm using blue as buy blocks. That's a square. I pass geometry. Um, okay. So this is what causes the return to mean distribution, right? So if it were to be, he likes the curve. Shut up. All right. So there's this tug of war, right? There's this tug of war. Price moves too far this way, um it buys, right? Pushes it. Um Price moves too far this way, sells. This is what causes the this shit. This shit right here. Chop, yes. Predictability, also yes. Think with your mind. People say they hate chop. The chop is okay if the range is wide enough, right? What if these were 20-point moves instead of 5-point moves, right? Still chop. The moves are easy to catch though, right? All right. This is positive. Now, everyone screenshot it if you want, okay? Oh shit, you guys can't see because my face cam's in the middle, huh? Well, you guys get the gist of it, right? Here, hold on. There's the little end part right there, okay? So, um, this was positive. We're gonna go to negative now. Eraser, 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 eraser. Okay. Now, negative, okay? That was, hold on, hold on, hold on, hold on, hold on, hold on, hold on. Oh my god, hold on, hold on, hold on, hold on, hold on, hold on. There we go. All right, bars, bars. Flip point could be right here for those of you that are gonna get confused on this. We'll just say flip points right here, but majority of this is negative, right? We're gonna say that the overall amount up here, right? The numbers amount negative. We're in a negative environment. Now, what does this mean? Uh, Prices get exacerbated due to increasing Nirvana exposure. Sells, buys. Okay. Uh, Price moves down. Price moves. Hold on. No, this is not split. This is net. I'm going on net. Um, Net and split are the exact same data. Split is just showing you um like calls versus puts. But net is the difference in the two. It's the exact same data. It's just they're calculated slightly differently. Um, so when you're looking at net and split, they're generally the same, but what I use net or split for is for seeing, so like if it's netted out to zero, right? So like if you see a bar like this or some shit, but then you flip to split and then it's like this and like uh this is a lot of interest in something that you're not seeing on the net, right? Because it's so netted out that the bar's small on net. So that's why I have it there. Um But anyway, sorry. So price moves down, right? Sell block. Now price is moving further down. Vice versa with up. Price moves too far up. It moves further up now. And that's what gets you this shit. Like trending days. This is where you get your trending days a lot of the time. Most of the time it's going to be trending down, but you can get uptrend days too. But most of the days it's going to be like this. um so that's kind of where the difference is between the two. Oh, sorry. That's to answer your question from way back. That's why zero gamma is important. It changes the entire dynamic of what you're looking at. So, Um, word up. Hope that answered some questions. Um, I was thinking about making a degenerate stream account based on your guys' analysis on the dashboard and see how far we could take it. How much we thinking? How much we thinking? 100K? 100K to zero? That would be kind of funny. I mean, I'm down. Um, so negative environment acts as an accelerant. It can if we move too far up or too far down, and volatility increases. The trigger's volatility with everything. Volatility right here. Wait. Volatility trigger. Actually, trigger's down here most of the time. But anyway, you know what I mean. You know what I mean. You know what I mean. You know. Pop, 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 pop. Sorry, I'm acoustic. Um, yeah. Volatility is the trigger. High volatility is going to exacerbate these moves and make them create that feedback loop. Yes. Yes. Um, just wait, dude. Just wait till we get this shit. Oh, dude, I opened up someone's Twitter link of me streaming, and it's such a bad picture of my face that the YouTube cut out. It's like it's like I'm yelling at the screen. Two in the pink, one in the stink. Whoa, advanced. Uh, I have no idea what you meant by that. It looks like a fingering technique, bro. Guys, I'm not gonna bring out a gun on stream. But trigger is the word that I'm trying to explain here. Um, actually, the trigger is down here most of the time. Yeah. Um, but yeah, man. Yo, does gum go old or go bad? I don't know how long I've had this here. Am I gonna die? Double spearmint? Surely this won't kill me. Oh, I think there's an expiration. 21st of October 24. I better eat these quickly. Ah, that's a bar. Yeah, it is. That's a rack. That's a rack. So next question then would be if negative environment acts as an accelerant, if it moves too high or too low, when exactly can we determine an example can we determine what too high? Oh, average IV, right? So if you're looking at the skew right here, too high is going to be call side. If we squeeze past this certain point, right? If we squeeze past this point, you might see what's known as a gamma squeeze. I hate that terminology because it's really called a delta squeeze, but GME coined the term gamma squeeze. So for all of you that don't understand that it is a delta squeeze, that's what it is. Um, could happen. But anyways, you're looking for the skew, right? So if we move past a point and the skew is too high on one side and lower on the other side, that would be considered too high. Um, I think there's an actual decimal point that some people look out for, like uh, fucking fuck, what was it? I forget what the decimal amount is, but it should be in one of these classes. I'll look it up. Hold on, hold on. Thanks, thanks. Hold on, hold on, hold on, hold on, hold on. So hold up. I need a good meme. Okay. Um, so the reason why I don't like using VIX, a lot of people do though. A lot of people do. I don't like using VIX because if you're looking at ODTE, uh, if you're looking at ODTE options, right? ODTE exposures, VIX is counted on a 28-day cycle or a 30-day cycle. I don't think it's 30 days exactly. I think it's like 28. But it's checking the implied the implied volatility for 28 days. Uh that's not going to help me with ODTE. So, I'm looking at ODTE average IV when I am looking for that trigger, that volatility trigger. But I will say that VIX has a product that's a 1 day calculation of implied volatility. Just saying, you, you might be able to use that one. I would look it up. I think it's just called VIX 1 day on your local broker and or uh trading view. I'm sure everyone has trading view. Um, Looking at the gamma exposure chart, would you say that 5075 is the possible support level? 5075. Um, I think 5065 personally. But pretty close, I will say. Uh, Again though, just my own 2 cents. Who am I? I'm just the math guy. Yeah, here, hold up. Let me find it for you. This. I'm gonna post it in the Discord. Now, I don't like all of CBOE's VIX products, so I don't necessarily use it all the time. But if you're having trouble reading the IV skew, then I would say that's probably your easiest bet there. Um, I feel like CBOE leaves out a lot of different calculations. Um, what else do we got here? I'm still learning, and at times I don't know what I don't know. I don't know what I don't know. Would you be interested in asking us questions once in a while during the stream so that we are introduced to a new topic? Oh yeah, that makes sense. I can do that for you. Um, Let me think of some stuff, and I'll start rifling off some questions to you guys. Can you use an aggregated view on Gamma to trade ODTE? Just to look at today's levels, which time frame? Yes, you can use aggregated view on gamma exposure to look at ODT. Sometimes I do that myself. I use an aggregate view to kind of define what the like long term what the market is trying to directionally go. Um, and if I know where the market long term is directionally going to go, I can tune into the smaller date frames and find more exact entries on different levels. So uh, oof, hold on. Need some more water. Water break. I need a water boy here. Oh. Which time frame is more important then? Uh, 30 days. No. Okay, the most important time frame ever Ever, 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 ever. If you're trying to catch like one of those crazy macro 100 point, 200 point, 300 point moves, okay? Quarterlies. Looking at quarterly expiration contracts, that's important in my eyes. That's what I'm looking at on like for investors. That's what I'm like, all right, time to pan out, pan out, pan out, pan out. Look at the quarterlies. A lot of interest on those quarterlies. That was some solid swallowing. That's some crazy work. Um, but yes, look at quarterly expirations. OPEX is important too. Selecting OPEX dates, I would say more so quarterlies though, or like the OPEX of those quarterlies. What's going like? Cause there's a large inventory on those quarterlies, bro. You wouldn't believe. You go look at your option chain right now. Tell me the interest of the quarterly options as opposed to the current options that you're looking at now. Um, then on the OPEX of those quarterlies, bro, when they expire, that's when options impact is like very, very heavy. Um, and that's where you can get those like crazy directional moves. Like I don't know if anyone remembers the bottom of October. Yes. Good job drinking water. Yeah. Call me Dyson, bro. Uh, who wrote the paper or article about DDoI? I'd like to find it on Google to read it. Um, Squeeze Metrics popularized it for sure. I think he has it's a paper. I think the paper's called DDoI. I don't remember what the paper's called, but he only has like three on his page. So, just look up squeezemetrics.com. Love that guy. Awesome. He doesn't know who I am though. Lemon boy. Yeah, I'm pretty sure I signaled longs sometime. I think it was like October 28th. It was slightly before the bottom. It was like one drop before. I exited way too early though. I will say that for a show. Did not expect all-time highs. On aggregate to tie next quarterly. Uh, might have missed it. Do you also use fibs to enter and exit? No, I do not. Um, strictly options exposures. Can you show an example on when to buy stock for a swing using the data or how you would use it? Yes. Okay. Select. We're gonna go here and we're gonna go for an OPEX swing. Right off bat. Right off rip. Right off rip, I'm looking at the downside. Um, oh yeah. By the way, all of these exposures are tuned to the selected dates now. Um, okay. So I'm entering lightly, right? I'm entering lightly on a downside position, uh, long term, and only lightly because of this right here. I need this to get rolled over and see what that looks like, soon, hopefully. But, um, mm, mm, this is a tough one actually. Hold on, hold on, hold on, hold on. Gotta relook. I don't like this either now that I'm looking at it. Um, okay, not conditions I actually like for a swing. So looking at this, maybe I won't swing. Or take a light. I might take a light short position, but I'm probably not looking long. That's for sure. Um, but I'm looking literally like all I did, right? If you're trying to do this on your own, is select date frames, right? And then and analyze it the same way you would a 0 DTE. Um, that's pretty much it. That's what I do. Dude, I need more water. Um, play this song. Would that work for individual tickers? No, it could. Okay, some people will have success utilizing it for individual tickers. Honestly, I think it's a coincidence because it should not work the same. Options exposures are important to SPX because SPX takes up 20% of all options being played in the market. The fact that the market cap for these options are exceedingly high on SPX, that's the reason why these options exposures work. Faking individually named tickers aren't going to work the same. Um, so that's why. Can we select more than 1 month date at a time, seeing only 1 month dates from the start date? Yeah, you can select a variety of months. We can increase this. Oh, wait, hold on. Maybe not. That might be a bug. Hold up. Oh, no, maybe not. Oh, it is a bug. All right, hold up. Thank you. All right, we'll get this fixed, but generally, yes, you should be able to select more than a month. I don't know why it goes to one date. On. Let me text. Uh, um, sorry, hold on. We just got a new dev, and hold on 1 second. Hypothetically, would your position expire on OPEX, or do you buy? Oh man, I need a bigger screen. Further out past OPEX, anticipating it to work out by OPEX. I'm positioning for longer than OPEX for sure. I want to see the effects that happen after OPEX has happened. Um, typically. So, hope that answers that question. Yeah, okay, so gonna work on this. Didn't realize that it's only letting you select 1 month for some reason. But generally you should be able to click 3 months. I'll make an announcement in the Discord when that gets fixed. Can you walk us through your thought process you just did when looking at today through OPEX? Uh, yeah. Wait, one looking at. You want me to walk through it again? The like selecting date to OPEX and then going through what I'm looking at? Right now I'm looking at the fact that charm exposure is exceedingly high in the negative space. Vaughn exposure is exceedingly high in the positive. Off that, it makes me think bullish, but the game exposure is making me think vice versa, not so bullish. So, what that tells me is to not take a position. Um, not take a position yet. Wait for it to either happen on March OPEX, and then I'll take a longer position then, or changes between now and OPEX. Continually looking at it to see if I can make any change or if there's any changes that are significantly drawing my attention. Otherwise, I'm not really in anything. Um, if I were, it would just be a very small short position to see to get feel it out or maybe get some skin in the game without having to lose my head completely. Um, but that's generally what I'm looking for. Um, something I've been using though recently. I don't have it here, but I kind of go back and forth. Um, where is it? Oh, I've been fucking around and finding out. Bro, isn't this modularity just so good? Dude, I don't know how people could not like this. We got one jot form message of like someone's like, uh, your modules aren't stabilized. There's a lock button, brother. Hit the lock button. Get rid of this because it's annoying me. Um, and then I'm not sure how to use DDoI and how to trade that data. What are key things to look for? So when you're looking at DDoI, it's open interest, but instead it shows you what's sold versus what's bought. Um, anything with a downside wick is sold. Anything with an upside one is bought. A lot of purchased stuff here for sure. Sold here. But other than that, um, I kind of use it same way I use gamma exposure. I found that it's the easiest way to use it. So, this I like to use as resistance here. This little gap between the posit or the uh call options and the put options. Um, and at the upper ends of these, you can think of them as short or long opportunities. I like to go short up here, long down here. And that's generally how I like to use it. Pretty basic understanding. Nothing too crazy. Calm, calm. If you want to get real nerdy though, you can go into like what it means, right? Like why bought, why sold. Um, and I believe that is also going to be covered in future classes. So, but for the most part, yes. If you're just looking for how to use the data, I would go based on that. I think most people are looking for the short answer. Um, right here, you can look at this as a bounce area. We don't hold this area. What is this? 5075. I think that was the same place I called a support area on the when someone else asked that question earlier. Coincidence? I think not. Um, but you can use that as like a support area. And then these as short and long areas. Um, if you want to get freaky though, wait for the feature classes. I think Sheen, if you're still here, can you tell me if there's one today? If not, I'll text you if I don't get an answer in like the next 10 minutes. Um, but yes, something I've been looking at recently is unusual options. Geo, why unusual? Because I know all so I only use stuff that I know, like I've done the calculations either myself or like someone has told me exactly why. I don't trust anyone else's math but my own. Or how people come to conclusions but my own. So now that I know that our flow is is a certain way, I'm fucking I'm cooking up. I'm looking at these options and then I'm setting filters. Sorry, hold on. That's what I meant to say. So if you want to know about filters, brother, at the money, true. Uh, vol OI, true. Add filter. Um, DTE less than 1. Fuck. Did I do this wrong? Hold on. Maybe it wasn't this one. Hold on. I think it was multi-leg actually. Is any? Yeah. Okay. Um, those are the filters I like to use on this shit. Um, because it kind of filters out the dumbass like in the money. This guy bought 5,000 call option or no, not 5,000, 4,000 call options with a 90 delta for like 2027. It filters out that bullshit. Um, so yeah, I like to see this. Um, Geo math question. I'm trying to calculate the effective delta of a contract, the value a broker displays in chain from the price of a con, spot, strike, and time to expiry. I think I've worked out the algebra, but it's hard to write here. Um, if you want to DM it to me, you can. I think I have you as a friend already. If not, I'll do that now. Um, um, Send me a request. I have a lot of fucking noties. It'll be the first one that pops up. Um, if you manually type out the dates, you can go further than a month. Oh, genius. Genius. Lloyd trades. Okay, so if I type out the dates, he says, what the? So this, what month are we looking at? Fucking 5, uh, 15, 2024? Boom. And then he just didn't do it because that's probably not an option date actually. What about 14? What about fucking 10? Okay, maybe it doesn't work. Alright, yeah. I'll get back to fixing that. Um, uh, I follow some Twitter accounts that post unusual options. Then they make a party when one of them work, while all the other calls are crap. Yeah, I mean, so you can go a little bit more in depth on unusual options flow. Um, it's all based on what you're trying to look for. If you're trying to look for someone that's piling in millions of dollars in out of the money options with like, I don't know, a week to expiry, that's something you're trying to look for, as opposed to someone that's putting in millions of dollars in an in the money call option with a high delta. That's an investment. They don't care if market direction is going to be down or up for the next fucking year or so. You're looking for someone that's putting fucking skin in the game as a core concept of unusual options flow. So that is what you should be looking for, and you can set your filters your own way if you want to, but that's just how I do it. Um, Probably could be more optimized, I'm not gonna lie, but um, I haven't really toyed around too much with it. I don't know why this changed. Maybe it's it just be I put the same date as the date range I'm looking for. Oh, I don't know. I mean, regardless, it shouldn't be working that way. That or it should be in it. It should also be selectable. So um, still need to fix it. I'm gonna eat some gum. Nice. If I die because of this gum, bro, if I die here, right now. Fentanyl laced gum. Mmm. That is some calculation you have there, Endo. Okay, so that's the thing, right? I think calculations are a lot simpler than people think. Um, so yeah, it looks like you're on the right track. Let me see. Um, I feel like you're sending me this in latex code. I can probably test this out if you want me to. Yeah, if this is in latex code, I'm gonna have to copy and paste it into copy and paste it into like Notion or something. To see the actual equation written out, but um okay, that would be helpful. Finding the effective delta though, that is an interesting concept for sure. You've piqued my interest. You're piquing me. Whoa. Whoa. Um, alright, you guys want some useful tips and tricks? Um, you guys want to find some W prints? W print. Let's see what we got here. Not a W print. Out of the money. W print. W print. Volume 5,000. Total premium 235,000. Implied volatility? Hmm? 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 Okay, so I'm looking for SVX, huh? Since I'm a index derivatives trader. Same filtering. Let me see. Oh yeah, it should be. They're all out of the money. Oh no, all multi-leg. Um, you know what? Let's not look for multi-leg. Let's get rid of this. Okay. Bar for bar clerks. I see you. Yes. Oh, this gum is gross. 517, not looking at these. 517, not looking at these. 1115, hell nah. Hell nah, hell nah, hell nah. What's something today, dude? What are you? What are these, bro? 260 date DTE, bro? Oh my god, get these losers out of here, bro. Jesus. I mean, they're positioning for sure, for sure. 48.25. What? Block orders? Hell no. Look at this premium. Non-multi-leg, non-multi-leg, 5,800 call option. Whoa, this guy just cracked out of his mind. What do you guys think's gonna happen with this guy? Thoughts, questions, comments, concerns? No, I will not sort by DT. I like looking at these losers. What the fuck? This guy's positioning 260 days ahead of time for 5,800, and he just went balls to the wall out of the money contract. Unless, no, this is only 245 in open interest. Um, 5360, 78 days, 2,000 put. 1,200 of the 2,000 puts are, oh, that is crazy, brother. What a beautiful world. Why do I look for multi-leg? I'm not looking for multi-leg specifically. I'm having them both in there. I'm really looking for single leg, but um, I have multi-leg in there because I want to see what people are like positioning. So like you could see different types of spreads. Different types of spreads tell you different types of directions. Is it a directional spread? Is it a spread meant for chop? Now you can kind of get a defined way of how larger people or people with large amounts of money are positioning. So um, from what I'm looking at, people are putting a nasty like strangle on fucking like way in the money, way out of the money options. Shit's whack, honestly. There's only like three people like actually. What is this baby premium? Um, value is greater than 50,000. Wow, it's 50,000, right? Two, three. Yeah, it's 50,000. All right. One DTE, 507 puts, 65K, 10,000 open interest. Wait, where is it? This guy's cooking right here. Oh yeah, this guy's on some shit. Total premium of 15 million. Spy out right now. When was this placed? Time 2:29. Fuck, is this EST? Hold up. Someone's texting me. They will be donating money to the market. Dude, we should put bets on these people. So this one just came in. Not that long ago, looks like. Did this guy short the bottom? Actually, it's not part of a multi-leg. This guy getting cooked right now. Unless he's right though.
was me.
Um. Look at the implied volatility on these bad boys. Wait, that's the reason why I had SPX open in the first place. What? Huh? I'm gonna have to talk to someone. I'm gonna have to talk to management about this. Insert Spider-Man meme. Okay, I'm looking at your equation here. Hold on. The idea is historical options data doesn't usually include Greeks, but if you can just calculate what they were from the info it does give me, that shouldn't matter. I can also save the Greeks data if you like really want to test it. I could save bro. I could do that, I think. I could make someone do that, I think. Let's see. Okay, so call price divided by strike or spot minus strike. Pretty much always 5%. Okay. Time to expire in years? Why in years? Are you looking for longer dated options with this formula? This shit is mad gross. This gun was good for like 3 seconds. Okay. Because that's what Black Scholes says to do. Something about annualized discount rate. Yeah, so the annualized discount rate is gonna be different when it comes to uh look at maybe. Let me work on this. Let me work on this some more after stream. I'll give you a definite answer. I really don't know. I'm just reading articles. God, I fucking love you guys. Oh yeah, dude. When you don't know, that's when you're doing something right. Oh, dude, I did abs yesterday. Destroyed. Um, should I do a giveaway? Hmm. We're thinking about doing a giveaway on Twitter, so stay tuned. Stay active. I'll leave this right here. DGen stream account at 100K. Okay, so someone was listening. Someone was listening. I can do so. Yeah, I mean, that's the start, right? That's the start of either being incredibly fucking crazy or the start of being becoming a genius, right? No one's really doing it. So either they're not doing it for a reason or they're not doing it because they don't know. So, you're onto something there. The fine line of crazy and smart. Oh. Um, like yeah, man. Um, let me get some. Uh, Someone asked me to ask you guys questions. Or acoustic? Yeah, you right on that one. Um, Let me think of some questions for you guys. All right, pros and cons of trading. Go. Give me your pros and cons of trading. Type it in chat. I think this is a great exercise for me to gauge how you guys view the market. No wrong answers, no right answers. There are more right answers though. But yeah, so type out some like I don't know what you guys think the pros are for trading, cons are for trading. Um if I get a lot of emotional responses as the cons, kind of tells me where you guys' heads at. Would be helpful. I'm trying to doctor you guys. Pros TL team. Yes, thank you. Thank you for that. Con, I used to have more money. Cons, holding losers too long. Cons, you lose money. Pros, you think you will stop losing money. Bro, you guys are hilarious. Um, okay, so what I'm seeing a lot of is you guys don't know how to exit, how to enter. Um, And you guys don't have any directional bias in your trades, I don't think. You guys don't have a target in mind. You guys are just in a trade because you think it's going to go down. Your target is uh, whatever feels right to you in appreciation of whatever asset you're holding, right? So you're in calls. I feel like $100 is enough money for me to feel good. You exit out and it goes more in your direction, and then you fucking get fucking crispy at it. Sorry, new slang word. Did anyone ask when you look at VanaNet, what's the positive Vana number that that look for to be considered bullish? Um, the more positive Vana is, the more bullish you get. Like 2 days ago, I think, or three, when I started streaming, Vana was at like 5 billion. That's not nearly enough for me to like be into a trade. Vana's got to be fucking like 10 billion plus at least. So that's kind of what I'm looking at. More like not high enough conviction for directional bias. Okay. So, my uh my rebuttal to all of these is I think you guys need to see how it works without taking a position. I think you guys need to see it over and over and over again and work. And you need to know why it works, right? You need to stick to one way of reading the data, right? So for a long time, Sheen was just looking at something like this, right? High exposure, high implied volatility impact. That's going to impact the SPX spot price in a certain direction, and that's where the cheat sheet was born. Um, Now he's moved on from this into a more complicated way of thinking. But it starts with step one, right? It starts with looking at things individually, the different components, how they work. Um, a lot of people when they're starting to build anything, right? I'm not talking about building a strategy for trading. I'm just talking about building like a fucking robot, for example. You need to know how every component in that robot works, how it moves, in order to get a full picture of the system that you're trying to build. So, Same thing goes for trading. Looking at each individual component, what average IV means, what high exposures mean. It's going to make you better as a trader. I'm not saying you need to know all of these things to make millions of dollars, because you clearly don't. There's people out there doing it that don't even know what this shit fucking means. But um, I can say if you're trying to look for a career in finance, I think it starts with that for sure. A lot of those people that are trading off of triangles, people that are trading off of wedges, people that are trading off of flags. Sorry for my symbolism, but personally, I don't believe that a triangle is gonna. There's no theory to it. It's just I don't even know where that shit came from. This triangle means we're gonna go up. That's it. That's all they give you. Why does this triangle mean we're gonna go up? Um, so I think it all starts with the dynamics of how these things work, right? You get a better understanding um of how the market moves. You get a better understanding of um why the market's moving in a certain direction. Um, you're getting really into the science behind options in general. So um yeah, I think it starts with understanding the individual components of everything, which you guys have been asking questions for. So it's just a matter of time, personally. Um, what if you just trade off vibes? A certain point, dude, at a certain point, it does feel like that. It does feel like you're just trading off vibes, but subconsciously, I'm calculating things without me even thinking about it anymore. I take one glance at the dashboard, I get the vibe that we're gonna go up, or I get the vibe we're gonna go down. Eventually it'll get that easy for you guys. Um, these streams are really quality. Thank you, Rizzy. Appreciate you. Glad you're enjoying the streams. Um, I'm just being me, man. I think in the finance space, there's a lot of people that are fake, and I think being just for real about everything, it completely 100% transparent about like how much we get charged on data, why we're charging for data, or why we're charging you guys in the first place. Like you guys have a right to know all this shit. Um, education's always free. You just gotta ask me some questions. A lot of times I won't go out seeking to like help people unless they're wanting to be helped. I went down that route before, did not turn out very well. So, if you're not actively trying to learn, um, then you probably won't get much out of any of this. So, actively learning is important. Um, but yeah, I'm glad you guys are fucking with the streams. Um, I ignored a lot of these questions in YouTube 1 second Discord. Uh, Pro freedom, con rush to win. But taking paper trades though for actually putting your fake money where your mouth is actually committing to a definite read. Yes. But I will say like so for example, it you don't have to even paper trade. You could just fucking look at the chart and see how it's moving in comparison to the data that you're looking at. If you see it enough times, you're gonna have confidence that it's gonna do that when you're actually trading. You just have to just fucking like see it enough times, and you'll be like, all right, I trust the process. I'm trusting the process right now. Size small when you start out. Don't fucking start sizing in a fuck ton of money, right? That you're not willing to lose immediately. Start seeing the gains. Sorry, the gains compound. Once the gains start compounding and you start seeing that, what you were back testing is finally working, then, it'll fucking you'll start winning as a trader. You'll start becoming profitable. It's not hard. You don't need to journal everything either. I've never journaled in my life. I know people do that. I personally think I spend more time journaling actual equations than I do journaling my actual trades. I couldn't tell you my P&L percent ratio, but I am positive a lot over my lifetime. So, I don't really, I don't count my wins. I don't count my losses. I just continually, give every single trade, the best of my ability. And that's why I don't trade very often, right? Because my trades take so long to, actually pan out, or not pan out, what's the word? My trades take so long for me to actually get into them, right? Sometimes it's a week worth of work before I get into a position. So, uh, I put my entire effort into every trade I take. Unless I sent out a tweet yesterday that was like I like to spoil myself with SPX 0DTE. I never consider my SPX 0DTEs like um I would never consider those like actual trades, if that makes sense. I consider that the same as me buying a lottery ticket every time I buy an OTTE. For sure, I'm like hoping that like I did the right analysis, right, and I'm doing some sort of analysis. I'm not just buying directly off vibes, but not nearly the same amount of work as I am for a position 100 times larger than my SPX 0DT. Um, minimizes hindsight. Yep, I knew that data told me this was the move coming bias. Yeah, exactly. Wait, aren't they all triangles? Nah. Uh, like I don't know, dude. I've always hated pattern trading. Um, certain exposures work at certain times and not in others. So I think knowing what market we're in is tough sometimes. Yeah, but you guys have an entire dashboard of like products. Um, you have time and sales. We're gonna try to get something that gets paired with time and sales if you can put two and two together. But um, you'll be able to there's a lot of different products other than exposures on our dashboard. I think the a lot of people come here for one specific thing when the entire time we're trying to show you guys the tools that you need on the dashboard in general, right? We have fucking uh flow. We have directional dealer open interest. Apex AI kind of analyzes the exposures for you. Unusual options if you're not used to that. Footprint chart. Footprint chart. Sheen devised a strategy with the footprint chart that has been very consistent, right? Three bullish candles with negative delta associated to them will leave in a sell-off. Will lead in a sell-off. With that alone, you can make a lot of money. Um, you can do that on any time frame, really. Uh, Same thing with vice versa, right? Three bearish candles with positive delta attached to them is going to lead into a pump. Same idea. Lot of ways to make money. Um, what else? The most important thing is learning which vibes are whack and trusting the ones that aren't. True. True. I think filtering a lot of the different types of trade ideas that a trader can come up with is important too, because there's a lot of different. Like sometimes you'll have like two different directional biases, and you're like, I don't know which one to choose. Um, to be honest, you might be both right, right? You might see a pump before that dump that you're expecting, but you just don't know which is gonna come first. That's what I utilize exposures for. For um, are the levels on the delta chart more significant than on the gamma chart, or does the gamma levels hold more priority? Gamma levels hold my more priority in my opinion. Geo, do you prefer the variance to be dispersed or orderly when it comes to skew? Mm, trying to think about that. Dispersed, I would say. Um, I'm only saying that because I'm trying to work on a current. Well, okay, dispersed in certain aspects. I'm trying to work on a current tool. Actually, I've been working on it for a long time. Um, at this point, my fucking life's work. I'm not gonna talk about too much about how the calculations work, but essentially, right, it's taking a scatter plot, and it's plotting every single order that comes in, um, and the implied volatility that it comes in with, and it's taking an average implied volatility of all of these orders that are coming in, and plotting the outliers. So if the data is more dispersed in that sense, the outliers are giving me more of an indication of what people are trying to do in the market. And I'm trying to get that information in order to fill a contract being immediately up 100%, with someone to sell it to immediately as well, as the liquidity is important with this type of strategy. So imagine you picking out an outlier, right? You filling that contract, and um that because so what a lot of market makers can do, right, is they can hide their position, but they can't hide the implied volatility that comes with that position, and that's what I'm trying to find. So Long story short, I'm just trying to fill contracts at a profit before without even making a move in the market. And long-winded answer to your question, but dispersed. I think a lot of people, because if you're looking at orderly, right? Um, there's nothing really to look at. I mean, it's like monkey see, monkey do at that point. Whereas dispersed is showing you people that are, trying to do a little something different. And they might know more than the vast majority a lot of the time. Also, 5100 is negative and delta adjusted, but positive in the skew adjusted and raw. How do you interpret that as an SNR level? Thanks. All right, so delta adjusted and skew adjusted is going to change significantly over time. With every minute that passes, skew adjusted is going to change, but you're trying to find a range, right? I use skew adjusted to define a range, whereas I used delta adjusted to define a direction in that range. Too far up, too far down, revert to mean in a positive exposure environment. But you don't need to know um, everything, right? Stick with one thing first. Understand what delta exposure means. Make trades off of it. You can do that. Sometimes I do that solely off of that. But that's kind of the difference between skew adjusted and delta adjusted. Um, do you see more continuation to the downside now? Can't really give too much analysis on that, but I will say I have puts. Um, so we'll see if those appreciate in value still. I'm hoping they go in the money because that's the only way I'm gonna make some bucks off of this. Um, but yeah, I've been in put since like 9 a.m. So I'm cooked right now. Your boy's cooked, but who knows? Um, other questions. Pro exposures tell you what the targets are, what forces are pushing. Yeah, exactly. Cons, exposures don't tell you if it's going to hit before 4 p.m. Yes. What would you call that volatility dispersion arbitrage? Yes. Thanks for your answer, and that tool would be amazing. Yeah, that tool is a pain in my ass, but it will be amazing when it's out. Oh, fuck my neck. You feel me? Um, oh. So when you say that we need to watch, and we need to watch and see the repetition of successful trade reads, and how they work, we can all look at ourselves to trial and error through it. However, that also be something like watching you or one of the experts here, a successful trader thinking out loud, yeah, I mean, you could watch us, right? So how I think is way of thinking has been far different, I think, from a lot of different people that I know are successful traders. A lot of people like to mirror other people. I've always tried to find my own way. I've always tried to find my own strategy because I think it makes trading fun. Um, I always like to back test my own things. I like to innovate. So, looking at other people never really helped me. I didn't have a social media up until like 2 years ago, honestly, when we first started this whole thing. So uh, I don't think I don't think watching other people is exactly what people should be doing. But again, if it helps, then it helps. Um, I always think that being obsessively curious about stuff is going to be your best teacher. If you're obsessively curious, you'll turn into people like me, like Windmill, like Willie. Ah, fuck, I missed that guy. There's this guy that used to ask very long questions in chat, and I've loved every single one of them. But yeah, so being obsessively curious is important. I think asking the right questions too, as opposed to asking the wrong questions, and that is like kind of a fine line, right? Because some people have to like they have to know which questions to ask. They have to know which concepts are out there. Um, it's a big rabbit hole, dude, once you start getting into this stuff. Let's see. It disappears, but you know the effort, mass, and space. It does sound like that. See where they are. Distribution day. Don't forget to stretch out. Yeah, dude. I need a. I need water. I need to stretch. Lucky I had a long night last night. I didn't get home till late. And oh shit, we're selling off. Don't tell me I'm gonna go in the money, bro. Don't tell me that. Oh man. This is what I mean, bro. My positions always go minus 90% before they go like positive a billion. Not actually positive a billion. But yeah, so um I don't signal either because I think people fucking would lose more money than they make actually taking my signals since I don't care how much I lose or how much I'm percentage down. I bathe in the red, bro. I am the red. By the time I was green, I was already a man. So, yeah. Um, trade how you want to, man. I will teach you entries, bro. Shut up. Um, if you were just starting and needed to focus on just one tool and approach, what would it be? Um, if I was just starting and I needed to focus on one tool, one approach, what would it be? Mm, think about that. Let me think about that real quick. Okay, so here's the thing, right? Here's my answer to that. I think anyone can be good with any equipment, really. Um, damn. Okay, that's a deep ass question for me at least. Because I've made so many tools and I pride myself on versatility more than anything. Cause like technically, right, you don't need a tool. You need a freaking notebook and a pen, right? You write down an equation, you get the implied volatility of the current option set, and then you get the realized volatility of what the future is going to price it in the future. Or sorry, vice versa. Uh, RV and IV, not IV and RV. Um, and you can easily just make millions of dollars off implied volatility spreads, um, doing that, right? So do you even need a tool at that point? No, you just need to learn math. Um, but do tools help? Yes. So I don't know. I would say get accustomed to gamma, Vana, and charm exposure. Plain and simple. It teaches you the basics of implied volatility. It teaches you the basics of time decay through passage of time decay. And then gamma exposure teaches you the basics of underlying price movement. Three pillars of all trade or what all trading should be. Um, yes, that's my answer to that, I think. If I think of another one, I'll give it to you, but um, I like them because they give solid basis on what people should be learning. I can't tell you how many people didn't know how to sell an option. I must not understand what I'm looking at. If Vana is positive and Charm is negative, we are positive Gex. I should sh should act as support. Then what would you see in the current data that leads to a bearish bias? So return to the mean is kind of where I'm at right now. Initially this morning when I took a short because um I had to readjust some things. But so that was based on my an older position that I was in. But uh right now, right? So aside from this big ass fat bar here that is going to be here regardless of what happens, I'm trying to get to like the 50-75 level, I think. Um Charm is greatly positive, but again, like I said, it doesn't really matter up until the close of the day. So, no, you're good, you're good. Yeah, so charm exposure being overly negative, I would look for a pump at the end of the day, but it's not that time yet. It's not pump o'clock yet. Um, Vaughn exposure, same thing. You gotta keep in mind these are all. Oh wait, am I still on zero DT? Yeah, these are all zero dated options. Okay, so a lot of these impacts are gonna happen once they close out or like when they're about to close out. The only one that won't is like gamma exposure because it's based on underlying price movement, right? So if underlying price movement moves too far up, it's going to revert back down. If underlying price movement moves too far down, it's going to revert back up in this type of environment. As for these two, you're going to want to wait till the end of the day to see a pump. That's kind of how you should go about utilizing these bad boys. Bruh, I'm running out of water here. I think I'm gonna close the stream at 12. I need to go grab I don't gotta grab anything. I gotta go work out. Oh, I gotta grab some food and then work out. But like last 15 minutes. Last 15 minutes of close. That's when I expect it to kick in. So long as it holds where it's currently at. Hmm. What happened on the 13th? I was TDEX at 17.02. 13, 13, 13. A significant drop in the day. That's probably why. What is an example of a volatility spread? A straddle. A straddle's a volatility spread. You could also type in Google what a volatility spread is. You'd probably come up with a lot more than what I can give you off the top of my head. Um, I think I was doing like an interest rate was it like an arbitrage strategy? I would say something like that. Um, God, I would love to be positive on these puts. That'd be fucking sweet. How much am I down right now? Should be alright. Um, how you would be looking at Charm to be negative 500 billion or less to move up in the last 15 minutes? Yes. Yes. Eh, to answer that, yes. Charm over negative 500 billion to look at a move at the end of the day would be awesome. I'm so high, I was wondering who you guys were talking to, and I noticed Gios streaming. You're cringe, bro. Oh, you're 100% in this chat now, buddy boy. I would like to think it's 'cause I smoked. Hell yeah. Hell yeah, brother. Dude, I've been getting so many spam messages. Ugh. Yo, we were thinking about doing a podcast. What do you guys think about that? Do you guys like our personalities, or do you just want us to be signal bots? You just want us to be like, here's my analysis for the day. By the way, you should not be taking any of our analysis ever. Should not be taking any of our analysis ever, guys. What personalities? Yeah, I don't have one. You're right. I'm a robot. I listen to the pod. Thanks, guys. It probably wouldn't be trading related. I hate talking about trading. I more so like talking about math, which is not directly trading related, I guess. So, um, yeah, I prefer to not talk about trading just 'cause it's low key boring, bro. It's the same shit all the time. Um, I don't know. I think trading is just like a byproduct of math. Dude, yeah, it's really just a byproduct of it all. Stay focused. Podcast is just a distraction. You're right. I need to make more tools. That's real talk, Johnny Houston. I fuck with that. Okay, math podcast would be cool. All right, that's what I'm talking about. That's what I'm talking about, dude. Trading's lame, dude. It's just a byproduct. You know how much shit you can do with math? I don't even have to. I can pivot from trading. I can go do some other shit. The dimensions of the perfect clothing brand. The dimensions of the perfect fucking t-shirt. Math and Toes podcast name. If you guys haven't liked the video, like the video now. If you guys haven't commented, comment on the video now for next class. You guys seem to have a lot of fucking questions, so just type them in the comment section and I'll get to them on tomorrow's stream. Um, liking the video helps us spread the good word of the Lord and Savior, Traderlink. True, it would be good to fall asleep to 3 minutes. I'm passed the fuck out. Shut up. I hate this kid. What am I playing as music? Why? Um, shit, I'm about to pass out. Mm. 7 likes, 50 motherfuckers watching. That's what I'm saying, bro. None of you like these tips and tricks? Who used to watch that? Tips and tricks with T Martin? I know you Call of Duty motherfuckers used to watch that guy. Come on. Under liked video. Whoa. That's my fucking mod right there. Alejandro. Oh hell no. I was thumb number 4. Everyone call out their thumb numbers. Dude, alright. I'll give a discount code for their next month off. Everyone put up their thumb numbers. I'm thinking of a number right now. 1 to 100. I know there's only 50 of you motherfuckers, but 1 to 100. Thumb number. 69, boom, got him. Fuck you. I'm thumb number 13. Don't cap. Ow. 57. 1. Everyone's gonna type in 1. Guys, it's gotta be your thumb number. Your thumb number. Guys, not just random numbers. What was your like number on the YouTube video? I'm picking a number right now. It's set in stone. 89. Fuck it. Fuck it, 69, you were right. Infinite dimensions using the machine matrices. Yes. Alright, you know what? Fuck it. Everyone comment. Um everyone comment. Hold on. Let me think of a funny ass comment. Hold on. Alright, you know what? Someone just comment something funny, alright? And I'll pick someone from the comment section as a discount for next month. Because I think I know, maybe this month if people haven't already renewed. This month or next month, one time use. Everyone comments something random. Your guys' chance probability wise is 1 in 50, I guess. 1 in 47. The less people that comment, the higher your chances are. Who's trying to get fucking who's trying to roll the dice? Wait, I shouldn't have shook my hand in that formation. Give me good guac recipe. Good guac recipe. Bro, okay. Have you had the everything but the bagel seasoning from Trader Joe's? That shit, bro. God damn. Throw some of that in the guac, bro. Mix it up. I shouldn't have. Alejandra's he's gonna screen cap this. But yeah, dude, fucking throw some everything but the bagel seasoning in that shit. Stir it up. Put some lemon on it. Limon. Stir it up. Oh hell yeah. Oh nah. Hold on, I'm gonna get the cheese name for you. There's this cheese, bro. Oh, bro, you throw that shit in the guac, you mix it up. Ooh. That shit fire. Fire in the hole, dude. I'll send you the recipe though. I'll send you the recipe for show. Alright, I think I'm gonna close stream soon. Um, it's 12:04, so I'm gonna leave you guys with some advice though, real quick. Um, develop develop as a trader. Stop thinking like a trader. Think more so as a mathematician or uh put reasoning to whatever strategy you're using. Why is it working the way it is? If someone comes at you that I use triangles as a breakout strategy, why are these triangles fucking working? Okay? Ask them why. Um, if you're in a signals chat, ask these motherfuckers why it works like this. If they don't answer, you're fucking never gonna learn from those people. So if they do answer and do teach you, fucking, stay there by all means. But don't get fucking scammed by people trying to give you this golden nugget of a strategy with no like reasoning as to why it works. Just it works 'cause it does, bro. So, fucking you know, build, get a little smart. Ask them. Ask them why? Why does it work? Um, that's enough yapping. Uh, Trick question. They don't work. I mean, most of the time it's gonna be like that. People are gonna tell you it works 'cause it works, bro. Like that's not a good enough answer. You gotta tell me why, brother. No, 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 no. Oh, why does that shit look so vicious? Yeah, exactly. So, I challenge you to ask these motherfuckers what their strategy is. They're not gonna tell you because it fucks with their check. So, um, you know, because triangles are the if it hits, it hits. That's what I'm saying. They'll hit you with the shrug emoji. I don't know, bro. I don't know, dude. It just works because it does. Yeah, exactly. Um, Damn. You won't post that on social media though, Alejandro. You won't. Actually, don't. That shit's fucking. I'm giving that shit some mad fucking strength. Um, yes. Develop some pillars in your knowledge as well. Some statutes. Entry. Entry, exit, and fucking how long to hold. Very important in trading. New tool coming soon. If you fuck with it, let me know when it comes out. We'll continue making more. If you have ideas, also let us know. Um, but yeah, uh, if someone tells you, hey bro, it's obvious as to why it works. Also read into that explanation I gave at the beginning of the string I did with the drawing and shit. Read into that more. Read into it. If you missed it, go back and watch it. All right, thank you for the great stream. I'm glad you guys like him in some way, shape, or form. I'm trying to teach these motherfuckers how to fish. I'm trying to teach you guys how to fish. That's how you fish, right? Yeah, yeah, yeah. I'm not trying to. I'm not trying to. I'm trying to. I'm trying to feed you and I'm trying to teach you how to fish. I guess in a way. I'm trying to do both. But anyways, all right, all right.